What I'm here to do is educate you guys about the importance of diversifying your portfolio into physical gold and silver. I moved around a lot growing up, so I'm from a lot of different places, don't necessarily have a hometown, and I don't necessarily have a home team. However, at some point I moved to Los Angeles in pursuit of acting and music. Wasn't making any money at it. It's really hard. I know one of the guys up here was playing a guitar, and I'm like, that is so cool. That was always what I wanted to do. Couldn't make money at it. And, in lieu of that, I wanted to get a job that was 9 to 5 so that I could practice music at night. And I stumbled into sales. I got a sales job that was a 9 to 5 sales job. I fell in love with sales, and I realized, since I didn't have a college education, that was a really great way for me to get into a career with an uncapped earning potential. And it taught me a lot about entrepreneurship. So who in here is in sales right now? A lot of salespeople? Good, but we can absolutely relate. So I look back at some of the odd jobs I worked. It got me enough experience to get into a job selling precious metals. And so for the better part of the last decade, I've been selling gold and silver. With that being said, my goal here is to educate you guys on just how easy that is and talk about why you may not own gold and silver right now. I know why you don't own it, by the way. You might not know why you don't own it, but I do. And the truth is, they don't necessarily make it easy for you. How many people in here can answer this question? Do you know why people 65 years of age are either dead or dead broke? Does anyone know the answer to that question? 3 reasons that I've found. Number 1 is bad financial planning. It's number 1. Number 2 is bad advice. They're either trusting their family member, the brother-in-law, people who are not necessarily qualified to tell them what to do. And number 3 would just be because they have bad timing and bad positioning, right? And a lack of education. So who wishes they bought Bitcoin when it was like $800 a coin, right? Nobody knows when that's gonna pop. So that's an example of when you time the market right, you get in at the bottom, you sell at the top, you take profit. So there's 3 different ways that you can actually make money. There's linear investing, active investing, and passive investing, right? Linear investing is you trade your time for money. You can work, you're going to get money back for that. Active investments are like real estate and things that require management, right? You've got to actively pay management. You've got to actively do the upkeep on the properties, and you've got to actively manage those investments. And then there's passive, which are stocks, bonds, mutual funds, maybe cryptocurrency, and of course, physical gold and silver. There's a report that came out from Bloomberg said that 45% of household assets are currently invested in stocks, bonds, and mutual funds. So what I have found and what my clients have found over, decades of research that we've done and experience collectively of speaking with clients, most people that went through the 2008 financial crisis, they not only lost with real estate, they lost with stocks too. Who lost some money back then that was invested? I see some hands. So when I look at my clients who we've helped that lost money back in 2008, they lost anywhere from 40 to 60% in the market. And the reason why is because they had such a heavy exposure to just those products. So what we've found is that through diversification, a very, very simple strategy of diversification, you can offset a lot of the risk that you would have normally if you had your money tied up in the market. So what we recommend is taking 20% of the money that you don't want to lose, that you've set aside for the purpose of not investing, right? Everyone's got money that they're not willing to risk. But you don't want to leave it in cash. You don't want to leave it in something that's not going to grow and appreciate, that's going to get gobbled up by inflation, right? So what our clients are doing is they're taking a portion of what they worked hard for and they're securing it in physical, tangible assets. What they have found through that process is an elevated peace of mind, because everyone knows the market's at an all-time high right now. Most people in this entire room raised their hand when they said, do you have money in the stock market? So if we look statistically, every 8 to 12 years, we've had a big crash. And I don't mean to be the guy up here who's like, trying to scare you and say you're going to lose your money if you're in the market, but I think it's the time where you want to get more pragmatic and more defensive about what you worked hard for, especially if you're relying on some of those funds to pay for your retirement lifestyle, or you're going to sustain yourself in the future. There's 3 different ways that our clients can buy gold. Number 1, they can buy it with cash that they have in the bank, non-qualified funds. Number two, they can buy this with a brokerage account. And a brokerage account, if you have money in the stock market, maybe you're worried about a capital gain. Well, what I've found is my clients that do the best do this in IRAs and 401ks for two reasons. Number one, you can roll over your funds from an IRA or 401k tax-free, penalty-free, and fee-free into an account as cash. And then from that same account, you can actually acquire physical gold and silver. And my team will educate you a little bit more about this, but that will actually create a tax advantage for you. And so the people who we typically help are people who have 401ks and IRAs who are primarily restricted. So one thing you all have in common right now, unless you have a self-directed account, is that your funds are all tied into just one marketplace. If you're with a retail brokerage like Fidelity, Vanguard, Charles Schwab, Edward Jones, what have you, they only let you invest in stocks, bonds, and mutual funds, right? Why do you guys think that is? It's because Wall Street's done something genius. They've taken $34 trillion of private wealth in this country, and they have restricted that to stocks, bonds, mutual funds, which are products that they own and control, right? I see, Roger, I know. You know what I'm talking about. They own and control those assets, which means they can leverage it, they can borrow it, they can lend it out. And during the 2008 financial crisis, when this happened, the banks had our money, and then all of a sudden they didn't, right? So how is it that you have a 401k or IRA, and then all of a sudden the bank doesn't have the money to pay you out? Well, it's because they turns out that you were just the beneficial owner of those funds. You didn't actually own the certificates of the investments. They did. They just lent the money out, and then poof, it was gone. So for my clients who had money in the market from 2007 to 2011 and then also had gold, they didn't just do better. They did much better. Did you know that gold during that period of time did 255%? Silver did even better, did 390%. So right now that we see the market at an all-time high, we've already seen people start moving in line with this. Gold and silver collectively have done about 40% over the past year. So one of the things our clients focus on is setting priorities and values. And so for the people who have like an IRA or 401k, I'm going to tell you right now, you can be in an asset where it goes up and down, like stocks and bonds. You have a lack of control, or you can take control and you can move that into a position where you have the ability to diversify outside of traditional investments. So with that being said, the way that our clients do that, it's a 3-step process, and I'll explain it briefly. Step 1, we open you an account called a self-directed IRA. Who has heard of a self-directed in here? Forbes actually rates this the #1 account that you can have. And one of the reasons why is because it doesn't restrict you to any one particular asset. So I tell my clients, you can think of the different assets classes, whether it's stocks, bonds, mutual funds, whether it's real estate, private equity, commodities, and businesses, gold and silver, cryptocurrency. You can look at all these different assets as think of them as the different colors of the rainbow, right? So there's 2 strategies. You can touch on every color. That's great. You'll get a moderate appreciation, and it'll offset some of your risk in any one particular asset, right? The other way that we've seen clients maximize their portfolio is simply by moving from color to color. So for those of you who are in IRAs right now that are not self-directed, that have just all this exposure to just one product that Wall Street offers you, you don't even have an option to move color to color. You're stuck in one place, and I just think that that's one of the blunders to avoid. So for those of you who are younger, who don't have a big chunk of money that you want to invest, just start small. Just start by just getting some over time. And if you did, a couple $1,000s a month or less even, think if you did that every month by the time you're 60 years old, how much you'll have. And that will create a store of value for you that's not attached to any central bank, that's not coupled with a nation's debt, that would offset any of the worst case scenarios between you being separated with something you worked hard for. And the best part is that it's private. It's 100% private. I know a lot of people up here talk about entrepreneurship, and I'll tell you guys, it was not always easy. My company's done hundreds of millions of dollars in precious metals transactions. I've got an amazing team that I'm so grateful for. I'm a father of 2 kids. If you look at the client testimonials we have, you look at the people who have done this, nobody ever was unhappy that they did this. So while it may be new to you, I think that if you take the time to educate yourself a little bit more about what that is going to do for you. You look at the track record that we have. You look at the track record of the products. It's something that it's a no-brainer. I want to give a special thank you again to Todd Alt for allowing me to be up here.